Hey, good morning. This is Meir Valensky with Driving Markets. I hope you're well. So let's look at where the action was yesterday. And the main action was in Netflix. Netflix was successful in dragging down the Nasdaq 166 points. Why? Because subscriber numbers are horrendous. They reported well below analyst expectations and well below market expectations. As a result, the shares were hammered. Remember, the shares are down already 42% this year. Now, 42% is huge. And yesterday, they went down in one day 35%. And the banks further have downgraded, 9 banks have downgraded Netflix going forward because Netflix has reported further that their expectations and their growth prospects, their forecasts are lower, and they're going to have financial returns are going to be more difficult, and the subscriber rates are going to be bled out to other competitors. Not only that, they have a problem that families and members are sharing passwords, and therefore the revenue from Netflix is being affected by that. However, they did say in the financial report that they're now going to put in certain measures to stop the password being shared amongst family and friends, and hopefully that will stop the bleeding and stopping the drain. However, that's only likely to happen in about a year's time or 2 years' time in 2024. Up until then, Netflix looks like an absolute sell and looks like a share that you need to get out of because they're losing numbers, they're losing direction, and they haven't got an immediate solution to where they're at. On the other hand, look at Tesla. Wow. So Tesla, after hours, came out with huge numbers, an 81% jump in profits to $18.8 billion. That's unbelievable. Huge. All the back of electric vehicles being sold globally. So Tesla is a market leader. And there, look at Elon Musk. Look how he runs his company, and look how he's going to run Twitter when eventually he's going to take it over. Yes, in my opinion, he is going to take over Twitter completely, and Twitter's board should agree to sell to Elon Musk the shares based on his offer, because they're going nowhere. Twitter is a nowhere company. It's not really growing. It's lost direction. And if it doesn't go with Elon Musk, in my opinion, it's going to fail and the shares are going to go down. It is mediocre social media platform compared to the competition in the same field. So if Elon Musk takes over Twitter, it'll be great, and that'll be a great social media platform, and the board should accept it. However, if they don't, take Twitter, in my opinion, as an absolute sell. What else can we look at? Bonds yesterday came off slightly from 2.92 all the way down to 2.84, and that gave overall encouragement to the markets. However, even though the Dow was up significantly, the other markets were down, and the bond yield is likely to go above 3% in the short term, as well as looking at gold. In my opinion, gold is going to go also well above the $2,000 level, and it's just creeping up there. It's pulled back a little bit based on investor confidence and people moving away from non-risk assets back into risk assets. So the investors' appetite was there to go and buy up shares yesterday, and it probably will continue for the next day or two. That's why I've always gone on about swing trading. Swing trading goes on over a period of time and not on a one-day basis, because on a one-day basis it's very hard to catch the market on a one-day basis. So you should be looking at swing trading. Let's look at a bit of Forex. Okay, so again, very quiet yesterday. The dollar was slightly weaker across a basket of currencies, only because the markets went up, and therefore people moved away from the dollar, which is a safe haven and a non-risk currency deemed as, and moved over to our currencies. However, the dollar is going to continue going higher. Be aware of that, simply because you've got a high inflation, high interest rate environment in the States and also globally, but we're talking about the dollar, so focus on the dollar, where you've got a high inflation, high interest rate environment with sales going through the roof. Yes, retail sales in the States, consumer sales, were all-time high over 3-4 weeks ago when reported, and likely to go higher further, which is going to boost company profits. When will those company profits come down? When retail sales come down, and when retail sales are affected, then you're going to have corporate earnings being affected. At the moment in the States, retail sales are at an all-time high, even with inflation and interest rates, which is very, very interesting. So there's a lot of cash out there. The property market is also burning. However, let's have a look where that's going to go regarding interest rates, and the likelihood is that's going to go south. It's going to go down when interest rates rise. Cryptos were pretty flat to down yesterday. Not much excitement there. My view is that Bitcoin will float down to 32,000, 33,000. And when it's there, that'll be the big test. If it's going to jump up back above the 40,000, 45,000 and well above the 68,000. Who knows? Longer term, I believe it will. Shorter term, I think it's going down to test the 32,000 level. If it sticks there, yes, it will bounce. If it falls below that, then there's going to be trouble there on the horizon. As far as the rest of this week's concerned, we've got more corporate earnings out today. Keep an eye on US reporting and see where it's going to go. The market's pretty steady. However, remember, I said to you, focus on swing trading. So if you are the wrong side of the market, whether you're long or whether you're short, you can hold on to it if you've got enough money on your account in order to ride out the storm. This is Meir Valensky with Driving Markets. Catch me on LinkedIn, YouTube, Twitter, Instagram, WhatsApp. Have a good day.